Lalit Malik now joins us, CFO of Dabur India, to talk about how things have transpired for the company for the quarter gone by, and how things are looking up after the lockdown quarter. Lalit, good morning. Thank you for joining us. How much importance do you think we should realistically pay to the numbers which you've reported for the quarter gone by? Because the quarter gone by was a very differentiated quarter for everybody.
That's right. I think COVID has been an unprecedented event which saw in this quarter severe impact in the initial months. However, gradually things started improving with the lockdown getting eased out in various parts of the country. So we have seen gradual improvement in last quarter, and currently we are witnessing the near normal situation, except in few areas where there are still certain lockdown. However, the situation is coming close to normal.
But if I keep the last quarter's number aside and I just focus on your volume growth, I'm looking at volume growth from FY20, which was at 10%, and you've not gone close to that number in last couple of quarters. So what has changed fundamentally for Dabur that in last 4-5 quarters volume growth has only tapered down to early single digit?
Well, I think we have always given for the last year guidance to have mid-single digit volume growth, and we have been mid to high single digit till February. However, in the March when the lockdown happened, that saw a decline, and that's why you see last year numbers being depressed. However, we have always maintained that our volume in the normalized scenario would be mid to high single digits, and that has been the performance also in last couple of years.
The areas which you represent, healthcare, where spend is going to go higher, foods, where Britannia was telling us that Indians are still consuming the same food in terms of their spending, home and personal care, where everybody is taking more care of personal hygiene and home care. These are categories which some would argue that in a COVID environment should have not got impacted. So do you think large part of your growth is because of lockdown or contraction in the category which has happened for Dabur and which has not happened for others? I'm just trying to understand that for the pockets in which you are, the demand actually should have been very high given that how the wallet's share has spent. I mean, I was looking at your numbers for Chyawanprash, they're extraordinarily strong.
Right. So I think what we saw in the previous quarter is a very strong growth in the health supplement sector, where whether it is Chyawanprash or whether it is Giloy or Tulsi drop, Haldi drop, etc. They have seen a very healthy growth. What we have also done is we have introduced many new products which are immunity built-up products and support products under the COVID scenario, which helps to build immunity. And that has seen a very positive growth. And with the products like Suraksha Kit and Immunity Kit, Tulsi drop, Haldi drop, etc., have actually given us a very strong growth in this quarter, and therefore our health supplement business has grown very healthy at almost 52.6%. However, what we have seen is the discretionary products, which are skincare products, where people were locked down in their house and they were not moving out. That's where we saw the impact on COVID being very severe. At the same time, when we talked about our food category, it is the out-of-home category which got impacted because of lockdown in hotel, aviation, etc., theatre and all. So people were not going out, therefore our 200 ml got impacted, but 1 liter, which is the home consumption, that has done well for us. So if we just summarize on that, in addition to that, the new product launches that we did, including hygiene products, have done substantially well. So in summary, our health supplement products, our oral care products and our hygiene products have done pretty well. However, our home care products, which are skin care, and also on the food side, on the juices, which were out-of-home consumption, got impacted, and that has resulted into the decline in these categories. So therefore, the sum total is that we had an overall decline with regard to the volume of around 9.7% in India FMCG.
Sure. Now, given that a large chunk of your sales do come from rural areas, and we are seeing a rebound there, what's the kind of rate that you're seeing growth when it comes to that segment? And will you then adapt strategy with more focus, whether it's on smaller, affordable SKUs or innovations that are more targeted towards the rural segment?
Right. I think rural has grown for us. In fact, we have 1.4% growth in the rural as against a decline in the urban. So rural has grown better for us compared to urban. It is also in view of the fact that, there has been migration of people in the rural sector. Second is the impact of COVID has been substantially lower compared to the urban sector. And also in view of Manrega and the fiscal incentives, there has been a positive income growth in the rural sector. And in addition to that, we have expanded our village reach from the beginning of last year at 44,000. Now we are above 52,000. So that has also helped us in terms of reaching out to villages in view of additional coverage. At the same time, our direct reach has crossed 1.2 million. That has also supported us to reach to the rural sector. And in addition to that, the low unit pack, which is the affordable pack for the consumers, these are put together and help our rural sector to grow much better than the urban.
Okay, great. Also, in terms of prices, a slight uptick in agri-inflation linked raw material prices. How does that impact margins? Are you further looking at correcting prices, given that that seems to be the industry norm right now?
Last quarter, there have been, to some extent, a muted inflation. So therefore, there was not a major negative implication on that. However, when we look going forward, there is going to be an inflationary pressure on our category of imports, especially in terms of amla, in terms of gold, honey, etc. We have seen certain inflation setting in, and that we will have to be careful with regard to how we can absorb with our efficiencies and cost reduction. And the balancing part, probably we may have to increase the pricing to a limited extent. So depending upon the market scenario, we are going to balance out between the two, and we will evaluate the impact and see how the price decisions can take place.
Looking good, and you've mentioned the segments as well where you're seeing some traction, particularly now, relative to the pre-COVID level. Just want to get a sense, with the whole host of launches that you've had, going forward, given that we're coming out of this COVID period, which are the products that you're seeing maximum potential and scalability in currently?
Right. So I think what we do see is that all our healthcare products that we have launched, like ashwagandha capsules, tulsi drop, haldi drop, giloy, amla juices, I think these are immunity built up besides our existing products like Chyawanprash and honey. And we do see that in view of the COVID implication, it is important that people have to build their immunity. They have become health conscious, and therefore we do see that will have a good traction going forward. With regard to hygiene products like sanitizer, etc., one has to see how the impact is going to be going forward, though we have seen a very healthy growth on account of these NPDs in Q1, and we do expect that health supplement products will continue to give us the upside going forward, and hygiene products, depending upon how the impact of COVID will pan out, depending upon that, we will have the growth in hygiene product categories also.
Okay, Lalit, closing comments. You've cut your expenditure, you've gone easy on advertising. It's a very easy and a simple way to protect your margins that you cut advertising. Are you likely to increase your advertising or are you committed to remain low on advertising and protect your margins north of 20%?
Right. So I think our advertising was reduced for a couple of reasons. Number one was that, there were no new programs were being aired on TV. So therefore, as a result of it, there were no advertising there. The healthcare and the other segments were not being sold. So therefore, there was no advertisement there. Plus, we got discount or the rate advantage, and we move towards digital. So these all have helped us in Q1 to reduce our costs and yet ensure that we have increased visibility of our products, including the Doordarshan channel and also the news channels. So we have improved our visibility and at the same time we have reduced our cost on advertising. However, going forward, depending upon the competitive intensity, we certainly are going to increase our investment, especially behind our new product launches and also the existing product launches. It will also depend upon how quickly the markets will open up. But certainly we are going to invest in advertisement to have better visibility and connect with our consumers. And the benefit of our cost reduction, we are going to plow back into increasing our visibility through advertisement as we look forward going ahead in the remaining part of the financial year.